if you look at it politically, like someone like Elon Musk, for example, genius, company's great, but he has so much political power now. He owns Twitter. He basically owns the satellite system that Ukraine's using for communications. And I look at him, and he also reliant on a lot of China for revenue in this Tesla business. And so politically, he looks for me uninvestable, if that makes sense, because you know that they're coming from somehow. They will at some point. Just like Zuckerberg. Maybe he's got, maybe he's dialed in with the right people and he'll be fine. But you look at a lot of his businesses are so reliant on government revenue, it's easy to see things going wrong for him. If you're probably like my age or younger, you probably got this idea that macro is like forever. It runs in predictable cycles. Everything should happen in a sort of normal way. And that is certainly how I used to think. I now realize that the way macroeconomics or economics in general is actually just a sort of subset of politics. And the way macro has worked is because governments have chosen to stay out of markets, if that makes sense. And so we've had like a free market system. But that system now is falling apart, if that makes sense. And so that leads, for me anyways, to some predictable macro trades going forward.
That's fascinating. Yeah, it does make sense. Although it's quite an unusual juxtaposition way to view things. Again, based on how I've myself, I think, been conditioned over the years to focus on macro, think in terms of cycles, the whole sort of Austrian model.
Yeah.
That's certainly interesting. So that is where you're at now. But in terms of what's led to that development, perhaps building on some of the points that you mentioned around the shifting focus towards politics and what's taking place, presumably inflation as well as part of the driver of that. Could you go in a bit of detail there?
Absolutely. So, for me, like where I sort of made my name and made my money back in the day was that when I looked at I was at a firm called GAM, and they used to have a lot of internal and external managers. And I always used to look at how did funds fail, right? Not how did funds succeed. Succeed's easy, but where because sometimes we get something wrong, right? And when I looked at how funds went wrong, it almost always was in currency. So typically your average fund manager will just assume that the currency is going to stay flat, or if it's trending higher, will trend higher, trend lower, will trend lower. And they just have that sort of implied within their analysis. And then actually currencies have a very strong, or used to anyway, a very strong mean reverting nature. So overvalued currencies tended to fall, undervalued currencies tend to go up. And so my sort of big innovation I had back then was you do currency first, work out where you think currencies are going, and then you go backwards from that till you get to the equities.
So for example, looking for the undervalued currencies and thinking of focusing on equity markets there potentially, and building out, obviously then doing your research to check that there's a catalyst there.
Yeah, the easy one is if you think the US is going to recession, you actually short Japanese stocks, because if the Fed starts cutting rates, the yen rallies, these Japanese exporters see their earnings crater, and the stocks are very weak. So it's that type of, or, if you think the Fed's going to cut rates, but the commodity cycle is tight, then you want to buy like emerging markets or exporters or that sort of thing. And that was sort of just that type of analysis is the way I looked at things.
I do remember some of that, actually. It's my first encounter, I think, of you before we met here today was actually on screen. It was probably that original interview going back in Real Vision. Rang some bells there. It reminded me of the currency cycles and how you used to look at it.
Well, the thing is that model sort of died in 2016. It took me, it's very hard to give up a model that's been successful and worked for you. But if, according to that model, or the way I was thinking about things, we should have seen a big Chinese yuan devaluation.
Okay.
People don't seem to bet on that so much these days. They talk about it, but it was a big trade back then.
Well, 2016 to me just brings up Trump, Brexit, and not so much. But now you remind me it's
so there are three big things that have Trump, Brexit, and Chinese capital controls. And now with a bit of time, I look at all three of those things as a movement away from free markets to more populism. And it's driven by very large income inequality. So voters don't want it anymore. voters don't want free markets, right? So that's the thing that, if you look at it, this is the thing that I think is really interesting is like we had a long period from the 80s and 90s, early 2000s, where politicians, when they went to the electorate with free market policies, they got voted in, right? And so that's why they were implemented. Now, if you look at what's happening, when politicians go to the electorate with free market policies, they're not doing very well, if that makes sense. And you can see why. And what I find really interesting is China, where they don't have elections and they don't have other institutions or anything else. When the government changes its mind, policies get implemented straight away. And so what I feel now is like China is the lead economy on what is going to happen to the rest of the world. And in some ways, if you look at what they did to their tech companies, is what's happened to Facebook to a degree. So policies are being implemented to destroy Facebook because no one liked Facebook and no one liked Mark Zuckerberg. And I'm sure like politicians in Washington were like, yeah, we can crush this company. We don't care about it.
Could you elaborate on that a little bit? You mentioned Washington. What exactly is taking place there?
So,
for those who may not be as familiar, admittedly, I don't know the details.
This is conspiracy theory type stuff, but I can totally see this happening. So, so they banned Huawei, right?
Yeah.
And Huawei was a big competitor to Apple and Cisco, right? And they banned it because they said Huawei could be stealing data or whatever. Yeah, fine, okay. Then you have TikTok.
Exactly.
And TikTok is Chinese owned, right? And 100% is collecting data on everyone. And I'm sort of sitting there going, why haven't they banned TikTok? And I think they probably sat around and went, if we ban TikTok, who benefits? Facebook. You know what? Let's think about it for a year or two. Do you see what I mean?
Yeah.
And if you read, so one of the things I do now is I pay a lot of attention to what the FTC is doing. The FTC has been talking about Facebook, we've been talking about Amazon. They also have been talking about the credit card companies. And I think they're going to start looking at landlords.
Interesting. So in the age of inflation, we're hearing about rent caps and stuff. At the moment, you could apparently apply to your council or something like that, and they can overrule the landlord.
So one of the things that I found really interesting is that I wrote to some people about I think rent control is going to come in, and this guy wrote back to me and sent this article from the Wall Street Journal, and that basically a lot of the sort of rent control institutions, laws, and are in place. They're just being neglected and not publicized. And so I think it was in Philadelphia or somewhere, this lady was looking at a 50% rent increase. She wrote to a local MP or politician, whatever, congressman, and they said, oh, no, you should apply to this board to get the building rent controlled, which it has done. And also, I think in Ireland, they're introducing 4% rent control increases.
Right, that might have been what I'd seen in passing, I think, last week, and that's why it sort of chimed and was top of mind. So just in the context then of the spectre of inflation and the conversation around it, with things like that taking place and potentially setting precedents, who knows, going forward, what sort of effects, amongst other things, is that likely to have on the current picture for inflation and the potential for structural changes or structural inflation going forward?
Okay, so I think the first way to understand is, I think the way, is particularly for a macro type of thinking. So, one of the first questions I ask myself is, why didn't China devalue its currency? Every other country I've looked at, Japan is constantly devalued. The pound is always devaluing. And it's always, everyone else, Korea, which is a very close proxy to the Chinese economic sort of model, devalues all the time. And I was like, why didn't China devalue? And actually, and this is where it gets a bit, I think, awkward for finance, economics types guys. But the thing about devaluing is you are, in essence, cutting the wages of workers, right? When you devalue, it very rarely is negative for rich people who have assets, particularly if they have those assets overseas or even domestically. But it's a real wage cut. So back in the day, if you go back to sort of like the 70s, even early 80s, even in the early 90s, devaluation was seen as a policy failure. Do you remember when the pound was ejected from the ERM, Black Wednesday, Friday, I don't know, one of those days. And then the major government was voted out of power. That was seen as a policy failure because at the time, people correctly realized that you were getting your wages cut, right? So it was unpopular. And then somehow it became like a policy that was seen as appropriate. And again, for me, this is like the politics of free markets and corporate interests being placed over labor interests, I think has gone too far and has now been corrected. And because in sort of Western democracies, both labor and the conservatives or Democrats and Republicans were giving the same type of policy announcements, that's how we started to get Brexit, that's how we started to get Trump, Le Pen, all the populists come in because, if you're giving people policies that don't work for them, they're going to go for the outsider. And what I would say is, what is interesting, so again, so coming back to the macro thing, is because China went to this sort of pro-labor policies first, how that's getting propagated through the rest of the world, I find really interesting. So China is not devaluing, so it's keeping its workers, real wages are strong in China, and China now imports food. So China has more expensive pork prices than the US, which is strange given relative income differences. But because of that, they're starting to import large amounts of pork and beef. And because their prices are much higher than world prices, they're also importing corn from overseas. And so for me, food inflation has become structural. And when food inflation becomes structural, politicians will do everything they can to try and get other types of inflation down and wages up. Because if you've ever studied any political history, food inflation is always the catalyst for every revolution that's ever occurred. French Revolution, you name it. So,
like the meat cake.
Yeah. So in the way I'm thinking about the world, we are in the process of basically moving away from policies that essentially made rich people richer to policies where we are taking from the rich to give to the poor, which is actually politically makes a lot of sense. We've been in a long period where we sort of went the other way because inflation became too entrenched and people hated it too much. We moved away from that, but we're now moving that way, which is why I think, and what is really interesting about it is that, so I've done a lot of analysis on it. So for example, what I did in the US, I took the price of a Big Mac and compared it to the minimum wage. So in the 60s, if you worked for 1 hour at minimum wage in the States, you could buy 3 Big Macs. Today, you can only buy 1. So my working assumption is we are heading back to at least 2.5, 3 times minimum wages, moving to that sort of level. So and then I'm pretty sure food prices aren't going to fall. So that implies massive increases in the cost of labor, which should mean interest rates go much, much higher because demand will be very, very strong. And what you've seen in last year or so is when you give people, workers, more money, either through stimulus checks or pay increases, they go out and spend it, which is why I'm very surprised at how bullish people are on bonds at the moment.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.